What's up, YouTube? Welcome to the Credit Plug channel. So for today's video, I just wanted to touch on a particular topic. Now, this is something that I've observed on a couple different videos over the past couple of months, and people complaining about underwriting requirements from the bank. Now, one thing you have to realize is that every institution has a business model in terms of the types of customers and borrowers that they're looking to market their products and services for. So I always say that there's no one size fits all. So every video that we do isn't meant for every single person, right? It's going to vary on a couple of different factors, including your level of income, your time in business, your credit score. So just generally speaking, you have prime credit and you have subprime credit. So when you have subprime credit, that means lower credit scores. That usually indicates that there's some type of issue going on with your credit, or you have some type of derogatory mark. So you're classified as subprime. Now, subprime credit borrowers have less options. So typically they're going to have higher interest rates and lower limits. On the other hand, you have prime credit. So prime credit is going to be outstanding credit, people with a track record of responsibly managing their debts. So when you have prime credit, you're going to have a lot more options available for you. You're going to get the best terms, the best interest rates, and you're going to be able to get access to much higher limits. But there's this assumption that you can get high limits with low interest if you have trash data points, right? If you have low credit score, or you can't prove your income, or you lack income, right? Now, as I mentioned, banks have different business models. So not every bank is going to be willing to take on a higher risk subprime borrower if that's not part of their business model. And a lot of the prime banks and a lot of the major banks, they cater exclusively to prime credit. The reason being is because they're in it for profit. They're a for-profit institution, meaning that they're only taking calculated risks that make sense from a business standpoint. So if they do lend a customer money, they want to prove that that customer actually has the capacity to repay that. So they're going to be asking for things like, your income verification, your tax returns, your credit score. So they're going to be asking for a lot of different data points to justify giving you a certain amount. So if you don't have income, or if you have low income and you have bad marks on your credit, you can't expect to have prime credit products, high limits, low interest rates, right? It just doesn't exist whatsoever. So just keep that in mind. Every product isn't going to be for everybody. And don't get mad at me. Don't get mad at the banks. The banks have their own criteria that they have to adhere to. So just because, you don't agree with the decision that they made on your application because you don't fit the data points, you can't get mad at the banks about that. What you would do is work on building up your data points, right? Work on increasing your income, growing your business to the point where you actually qualify. So it's not the other way around. I think some people approach the lending space, credit, like it's a government handout, right? Like it's a stimulus check. It's not a stimulus check. You're entering into a legally binding agreement to repay a loan or a credit card, whatever the case may be. So it's not free money. I think some people might get it confused. It's not free money. You do have to repay this money back. It is a legal contract that you enter in. When you sign a promissory note, you have to pay that money back. So you have to approach it as such, right? It's not a handout. The banks don't owe you anything. They don't have to bend their rules to fit to your data points. You have to build up your data points to fit the underwriting criteria. And the reason why people with prime credit get access to the best credit products is because they've demonstrated themselves to be a reliable borrower, right? So they're an asset to a financial institution or a bank. Now, if you have a history of derogatory marks on your credit, you present yourself as a risk. So to account for that risk, lenders have to charge you higher interest, and they're going to reduce the amount that they're going to extend to you, because if they extend a lot of credit to a risky borrower, that reduces their chances of profitability, because ultimately what happens are higher risk borrowers have a much higher default rate. So they're going to be defaulting at a much higher percentage than someone with excellent history, excellent data points. So the banks just want to ensure that you meet the minimum requirements for their different loan products. So the best thing you want to do is position yourself to be as least risky as possible. That's why I'm always talking about building up a banking relationship, bringing some deposits to the table, right? Those are just little small tactics that you can utilize in order to increase your chances of getting approved, because you're lowering your risk profile. But if you don't bring any money to the table, no deposits, if you have bad credit, if you don't have the tax returns to substantiate your income, if you don't have the cash flow, things like that, time in business, all of those things are going to either help you or harm you in terms of getting approval, whether or not you have those data points or you don't. So don't just think that the banks are just going to bend their rules to fit your trash data points. It's just not going to happen. If you feel like it's not fair, the banks don't care about your feelings. They're in it to make money. So the best thing you can do is do your research beforehand to understand whether or not your data points align with a particular financial institution or a particular credit product. Not every credit product is for everyone. You know, that's like me going to American Express and saying, hey, I really like that black card, but I know I don't spend enough every year to qualify for the requirement. Can I still have the card? And you know what they would say? They would laugh right in my face, right? So you have to just put things into perspective. Not everything is for everyone. And that's why you have different lenders that have different business models that cater to a different type of borrower. So don't get mad if you don't fit the requirements. It's okay. There's another solution out there. And that's part of what we try to do on this channel, is just share those different data points. So that's all I really wanted to cover in today's video. Until next time, take it easy and we'll talk to you soon. Peace.